Lululemon Athletica, another Canadian-based, and that's just on the NASDAQ now, not on the TSXX, but TSX. Lulu is the symbol LULU. Stock price $166, about a $20 billion market cap. It is a well-known, iconic North American brand, designs, distributes retail, technical, athletic apparel, footwear, and accessories for men and women. And under the Lululemon brand in the US, Canada, Mexico, China, mainland China, Hong Kong, Taiwan, Macau, and internationally. They have a total of around 784 stores worldwide. And we foreshadowed this. I talked about this earlier, down 50% over the past 6 months. What is driving that? Well, the company just came out with their Q2 results. Net revenue increased 7%, 6% on a constant currency basis, but comparable same-store sales increased just 1%. And in the Americas, comparable same-store sales decreased 4%, 3% on a constant currency basis. The bright spot here is international, but it's still a small part of the overall business. It increased 15%, 13% on a constant dollar basis. Income from operations decreased, however, 3%. Diluted earnings per share came in at $3.10, down from $3.15 in the same period last year. So that is driving lower earnings. Actually, the earnings number actually came in slightly above estimates. It was really the lowering of guidance. The company lowered full year 2025 revenue and EPS guidance to the range seen here amid U.S. softness and tariff headwinds. So the valuations here, certainly on the low end of this company's historic valuation profile. PE right now adjusted 12.7. That's based on analyst estimates. Those may come down a little bit, but that is the current estimate right now, or the current multiple based on those estimates. Lululemon, our conclusion here, they have built a powerful brand, premium brand in the athletic and casual wear market, cultivating a loyal, almost a cult-like following as well. A strong brand allows the company to maintain high pricing power, industry-leading gross margins, recently at around 58.5%, even in the face of market pressures. There is some thought, there is some brand fatigue here. We'll see if that continues. But there is softness again in the North American market. Lululemon's core U.S. business has been struggling, with recent America's comparables decreasing. We talked about this, 4% in the last period. Management has acknowledged that product assortment, particularly in casual and lounge categories, had become what they say is too predictable. This suggests the need for creative refresh to reignite domestic demand. Company's reduced its guidance, profit forecast, citing higher tariffs. We saw that. So it is now trading at the lower end of its historical valuations. We ask, is that an opportunity? We're going to look into it a little bit further in our upcoming analyst meetings. But for right now, we would be on the sidelines in terms of Lululemon. The main holding here for Keystone and our clients is still Group Dynamite. The company has done tremendously well this year. Trades around in the fair value end of its range right now.
It really shows the two different stories. You have Group Dynamite, they're raising their comparable store growth with the last quarter. Mind you, there's a bit of lag here, so they're obviously reporting in a couple of days, so we'll see if that holds or not. But they did report after the whole tariff tantrum. So likely that, in my opinion, that is going to hold. And then on the other hand, you do have Lulu. They're dropping their guidance. So you have these two very, very different. Group Dynamite is about half American as well, so it's not like it's apples to oranges geographically. And it's their American stores are actually doing better than the Canadian in general.
Yeah.
So it's really just two different scenarios of growth and in the same economy. Yeah. And it can be just one of these shifts of really brand identity now. Is Lulu just becoming out of favor? And we've seen that before in fashion, time again.
I did note that, in the last 6 months to a year, Brennan has been buying Lululemon. So, I think that's your negative or reverse indicator on the sector. As soon as you see, somebody from Saskatoon buying Lululemon or your brand, it is done. it's over. So maybe Lululemon. I'm just kidding, but but no, but fashion is fickle. It is a hard sector to project because I mean Lululemon can still make the same quality clothes, and if the market or the its target market says, you know what, this is out, your brand is out at this point, then it's very difficult. Then suddenly you don't have a premium multiple and you go from like having a 30 times earnings to 12, 15 times forward. And, it can really destroy the stock, at least in the near term. Perhaps it's an opportunity if Lululemon gets back on track. I mean, it is an iconic brand. Their clothing is fairly well thought of, in terms of its target market, and they have had a cult following in the past, but certainly it shows you. I mean, the multiples earlier this year, you would have been trading at 30 plus times, and you would have that's why we're looking at that. We think it's a great company. We don't want to pay any price for it. And then you look at Group Dynamite earlier this year. We think it's a good company, but we were paying 12 and a half times or under. And, with more growth in terms of same store sales projected and at the time. So that's why, you look at a company, Group Dynamite, Lululemon, iconic brand, very well run company, but which is the better buy in the market at that time? And for the course of the first 6 months of this year, certainly it's been Group Dynamite, but we'll see how and track those companies going forward. It is a tale of two markets in the financial retail market in Canada. You look at like Canada Goose suffering over the past several years, but you look at Aritzia. It's gone from the past 6 years, like the $16-15 range up to 80-85. So, I mean, the market will reward you if your same store sales growth is good, your profitability is good, and your revenue growth is good. And you've seen that with both Group Dynamite and Aritzia. And then on the flip side, you get punished in this segment if you have stumbles in those regards. So.